Okay. I think we're probably going to be okay. Let me see if this thing, there we go. All right, we're good. Okay. All right. Okay, good. Anyway, I'm not even going to go into it. We'll just keep rolling. Okay, here we go. Hopefully we have video and we have sound today. All right. Let me make sure I've got this. We're good to go there, I think. Let me double check. Yep. Okay, we're good there. Okay. Back to this. All right. Okay. Good morning, everyone. And let me see. I have no idea. Okay. But I'm just going to roll on because I'm not sure. There's a couple things. Okay. So today's Energy Wednesday. Some good things to cover on the energy front. I think it's mostly good. So we're on day 36 of this government shutdown, and we're starting to see the impacts of that, okay, on the nuclear arsenal. And I want to go ahead and run this clip on this. Let's go ahead and do this. This is Chris Wright, our Department of Energy Secretary, talking about how this is starting to have an impact. And I think this was even a couple of days ago. So this is becoming an issue where they're having to furlough workers around the nuclear arsenal. Here we go.
We're going to maintain safety and security of the existing nuclear arsenal, which is essential for the sovereignty of our nation. But it's deeply irresponsible to see the Democrats run this, more than a month now. And unfortunately, we ran out of budget gymnastics we could play, and we have to start furloughing workers who are developing our next generation nuclear weapons and nuclear stockpile. This is very frustrating to me and angering, frankly.
Okay, so we're setting this record on the number of days of this shutdown. 35 is a record. I think we're on day 36 now. And so these are the things that start to have an impact, okay? And so what we're going to find out here is what we need in government and what we don't need. That's part of this process, and I think we have to go through that. Now, how big is the risk? I don't know. I mean, it's hard to assess. It might be hard for him to assess. It might not be. How do we protect that? That's the question. How do we protect the government? How do we protect these things? Okay, so let me keep rolling here. We've got this. And the question is what's going on an indication of a further breakdown, okay, in the system, or are we taking on the challenges that need to be taken on? Okay, like getting rid of government, getting rid of some of the government workers. We've seen this week. We were supposed to get the employment jobs number, the non-farm payroll on Friday. We're still not going to get that. Today we do get the ADP number. So that's the advanced data processing. They're the private company that does a lot of the payroll stuff. And so the question is, do we even need the Bureau of Labor Statistics at this point? Because again, we've talked about this the last couple of days. Is this data actually even being manipulated so much that there's not that much value in it? And it leads to a narrative control, right? It leads to narrative control for the Federal Reserve, for the government to manipulate these numbers. And that's what we saw during the last administration, was a lot of manipulation of these numbers. Okay, so is this, and here's the other thing with this ADP. We saw a divergence between the two. For a while, the ADP would come on a Wednesday, and then we get the non-farm payroll on a Friday. So this would be jobs week normally, right? Everything would be focused around jobs, the first week of every month. Then we started to see this ADP through 21, 22, 23, even into 24, probably even deeply into 24, where the two weren't matching up very much, right? The correlation was falling apart. And that was because the government data was being coerced, manipulated, massaged, whatever. And then finally they had to take the big revisions, right? We saw the million job revision down, which mostly centered around the government jobs. So it doesn't surprise us now to see that the ADP and the government data were diverging, and they should be somewhat correlated, okay? If we're getting two separate reads, one on the private side, one on the government side, they should line up. If they're not, there's something probably going wrong somewhere. And the question is, when we get into this whole space, is it really going to be the government data that's going to help us as we go through this AI revolution and we start to see job losses trickling away? We see, jobs trickling off. Is the government going to be the ones to pick up on that better, or is the private industry going to be better at picking up on that? I would probably lean toward the private industry and again, ADP is looking at payroll that they do, so they're processing a lot of checks and so forth like that. So they're probably seeing pretty accurate data. The problem is it's nice to have a government check and a private check because you can't always trust the private industry either. Someone could get in there, they could pay somebody off, they could manipulate that as well. All data is subject to manipulation. So it's nice to have both the private and the government and see that these two are working hand in hand, side by side, and the correlation is strong so that we know, okay, the government's checking it, they're checking it. It's nice to have two things checking, okay? So just a common sense kind of a thing. All right. So the the probability of what's going to happen by this weekend because of these things, right? Because of the lack of data, because of the all these things going on, are we going to see some kind of traction by the end of this week on this shutdown? Are they going to get it together? Is there going to be enough pressure? The problem is we see this Mamdani guy win, right? And it starts to give wind in the sails of the AOCs and the Schumers and so forth, and the Newsoms out there, right? All these lefties, that are pretty much crazy. Does this start to give them wind in their sails? And they're like, nah, you know what? We're just going to let this government down thing roll on. And does it shift the tide in their favor? That's one of the questions that I've been thinking about as we watch this Mamdani character get in there. Okay. And actually win by quite a bit. It's pretty concerning, actually. Okay, so we've talked about the other two things around this government shutdown. Big things was obviously the food stamps, the EBT, and then the healthcare enrollment issue. It's underway now. I mean, we're the first week, almost we're halfway through the first week of November. So a lot of this stuff's going to come into play, and people are going to be unclear on where their healthcare enrollment stuff stands. Okay, so that's going to become an issue. So this is where is this going to how is this going to unfold? I think there's a lot of questions, and then we see the stock market coming off. Now, is that because of Wall Street and this AI thing that they're trying to sell us on? Remember, they'll sell us on the way up on AI, and then they'll use it on the way down, and that may not be the real issue. Okay, the real issue might be things like this. Okay, or it might even be this manufacturing data. So we've been talking about this, for the last month or so. We've been watching the manufacturing data, and this is why, right? We're going to take a look at that a little bit deeper today and look in the manufacturing data and see that this is 8 months of a decline in the manufacturing, and what we want to see is that going up. Okay, as we put these tariffs on, you want to see that that's forcing manufacturing back into the U.S., okay? And that's why we watch this Russell 2000 too, because I don't know, there's other places to look, but it's a pretty simple place to look. It's a big picture place to look to see, are we getting manufacturing data? Are we getting manufacturing jobs coming back, okay? Or is it what we would hope to see, but we're just not getting it, okay? And so we'll go into that here in a minute as well. All right, so I think we went through this ADP, and now this has become the big number, okay? It's the big jobs number of the week, and people are going to lean on it. And I've talked about this too, where I think that the Federal Reserve gets plenty of data on jobs. They know what's going on, but they can't. It's from the private sector, so why is it any better than the ADP? It doesn't give them any leg up. The BLS data is something that they can utilize, again, for that narrative control. Same thing with the government, right? They love to take a victory lap when they get a good jobs number on a Friday, right? They'll send out somebody from the administration and they'll talk about, the jobs, or they'll spin it in some fashion or another. Without that, there's no narrative. So everybody's in the same game with this private data, whether it's ADP. And ADP has the most history to it, right? People are familiar with it. So it has kind of now stepped in to become the big one, right? The big jobs data of the week. And I think that comes out this morning. I think it's 8:15 or 8:30. So we'll want to take a look at that. Let me see. Let's see when that does, the timing on that. Why don't we just do that? Why don't we jump over and take a look at this, and then we'll circle back to this jobs data. Okay. Or to the economic data. Let me get this up there. Let's just kind of scroll through this again. Hopefully that's the right one. Nope, there it is. Okay. So here we go. So let me see what we've got here. When's ADP? Yep, out at 8:15. So in like a minute and a half or so. And then we have ISM services out at 10 a.m. Those are going to be the two big ones. We'll get crude oil inventory later today at 10:30 a.m. And then what else are we getting in terms of German factory orders? Let me update this. Let's just see what kind of happened in Europe. I haven't had a chance to look at this morning either. Okay, here we go. So all in all, German factory orders were a little bit better than expected. French industrial production better than expected. Spanish services PMI better than expected. Italian services PMI better. French better. German final services PMI about flat. And then Europe overall final services PMI better than expected. So this makes no sense to me because we're watching Europe. We're watching Europe struggle tremendously. And these kind of data points just make no sense. So again, are they one-offs? But that's pretty comprehensive. I mean, you can see everything in Europe came out pretty positive today. You have to wonder about that. Something to keep in mind. And like I said, in 29 seconds, we'll get the ADP data out. We'll take a look at that. That is the big one of the week right there for the jobs front. And then we'll get I don't even think we get unemployment claims. We won't even get unemployment claims tomorrow either. And then the ISM, and then that pretty much covers. President Trump will be out speaking today at 1 o'clock. And then Canada, boy, I wanted to cover this. I think I'm going to skip it. Do this tomorrow. Canada is really struggling too, okay? And we're seeing Carney have to make adjustments. And I really wanted to go into that today, but I don't think we're going to have the time. But this is Canada, Bank of Canada Governor Macklem will be out speaking at 4:30 today. So this afternoon, there's some pretty significant speaking. I mean, President Trump always garners attention. At 11:30, we get this governor board member Schuden out of Switzerland speaking. Again, we've been talking about this Swiss franc. I think this Swiss franc is something that hardly anybody out there is going to cover. I mean, I don't want to say I'm the only one, but I just don't know I don't see anybody else talking about the Swiss franc. And yet I think it's one of the most important markets going forward here for us to pay attention to. Okay, that and the US dollar. And, so I want to pay attention to anything that's coming out of Switzerland, right? I just think it's critically important, and it could be the canary. I think it's more than a canary. I think it's like a turkey vulture in the coal mine, right? I mean, this isn't just a little Tweety bird. This is something pretty big here that I think is going on globally. And again, we talk about these things. Yesterday was debt day. We didn't really get into that, but Switzerland is at 0% interest rates, and so that's what's going on with their currency, okay, and what's going on in Switzerland is just, boy, there's so many things we could cover on that. But it doesn't really matter. Here's the thing. It doesn't really matter that much what we think's going on. We can watch the currency, right, and we can hear their responses. We can watch the currency. What's great is this currency's been, well, I mean, look, it's not my job to say, like, I guess, what's good and bad or what we want as a result. Let the markets decide some of that stuff to some degree. And then maybe we can make determinations as to what's good and bad. But what I like to see is this, right, where the currency is making a move, okay, and they kind of have to respond, right? And so here, this Schuden guy, right, this governor board member Schuden, okay, he's going to be out speaking. Hopefully he's getting questioned and he gets questioned on this currency, or he just puts it into a speech and we can see what he has to say about this when this currency is weak like this and they have to respond. Now, it's still elevated levels. It's still sitting at, 124 basically to the dollar to the Swiss franc, where this is the Swiss franc to the dollar, right? Again, we talk about this. Is it the Swiss franc over the dollar or the US dollar over the Swiss franc? And we look at the futures market, we look at the Forex market. It's just a matter of what we put over what. The futures is the Swiss franc over the dollar. And that's right. When it's going down, that means the franc's dropping against the dollar, right? And we have those two harmonic structures, which is just fascinating to me too, that it just came along right now. And it fits very well technically. So again, we had the technical outlook and then the harmonics came in. And now we're going to look at the harmonics predominantly and just use the technicals secondarily, okay? But we kind of let our way in with these technicals, looking at the technical analysis. Okay, and I think that covers that. And then again, one of the other big things this week, we'll take a look at that in a second, but I just want to go through this. Tomorrow we're going to get the Bank of England, and we've been talking about these issues, right, with Chancellor of the Exchequer, Governor Rachel Reeves. Is that right? The Chancellor of the Exchequer, Rachel Reeves, right? Yeah, I think that's the way they say it. Okay, so we saw the issues there, right? They're going to have to raise taxes. They're blaming things on other people. They're blaming it on Trump, right? Easy guy to blame it on, right? World loves to blame things on Trump and on the tariffs and so forth. And so what's the Bank of England going to do? Remember I think it was not the last meeting, but the meeting prior, they couldn't even get the vote off, right? They struggled. They were like, they had to vote and revote and revote. And so I'm watching to see what they do. You could see the votes there, came in at 0.27 before, then 0.36. Currently, the rate sits at 4%. Are they going to hint at going lower, 3.75? Or are they going to sit at 4, right? Or maybe they even make a potential move, okay, to try to accommodate the weakness that is out there, okay? And for sure in the Europe. And again, that's why that data, all this data up in here, it just doesn't resonate well with me. I just don't. I see all these positive numbers up in here this morning. It's like, okay, great, we'll accept it. I mean, there's no doubt we can't fight the data, but it's just fishy to me. And if we look at these things, let's just look at a chart or two here. You can see it's pretty flat, hovering at 0. So again, it doesn't really matter. Is it positive? Is it negative? It's slightly positive. It's not really a big deal, right? If we look at that chart. Then if we look at this chart, okay, so the French production was 0.1, expected at 0.8. Let's see if this has any impact. No, you can see it's still really pretty much flatline. Even if we take out all of COVID stuff, you can see it's still not making any real significant higher highs, no significant lower lows. So even though all the numbers are positive, it's not making that big of a difference. The other ones we actually don't have charts on. This one right here, Italian retail sales, we do. Let's take a look at that real quickly. Let's take out COVID again. Okay, and that's a little bit negative. So there you go. So there's a bad read out of Italy on that. And that just, it just tends to make more sense. Their retail sales are down. Okay, all these other numbers we have no charts on. So again, we have no perspective. Actually, do we? Yeah, no, we don't. Okay, that's all we have charts on. And you can look back, keep the history. It'd be nice. I wish I had the ability to track all these things, keep all of our own data. It would be nice, but it's just too much work, And as a trader, I kind of don't care. I mean, I just, you're sort of taking things in, and let's see if I can get. You're sort of taking things in. Let me see if this is actually going to work here. Okay, that'll work good enough for now. You're taking things in, and then you're letting the markets decide a lot of stuff. And that's why the harmonics come a little bit before that for me. So it's like, okay, we get this harmonic structure in something, and then we start paying attention to that market, right? And work around that market. And then you try to piece the story together. All right, so let's get back to this stuff. I want to get into this. Let me see if I can. I'm a little bit frazzled here this morning with these issues, but let me get this stuff going here. What happened to that one? Let's see. I've got two PowerPoints up. One I did the other day when I was helping out Aaron Day doing a show, and I couldn't get the stuff to transfer over to the one, so I'm going to have to flip between the two. Okay, here we go. Let's get this going. Let's move through some of this data. I want to go through, let's pound out our data. Look at this again. So big takeaway for this week is all the FOMC speakers. We had all 4 central banks last week meeting. Okay, we had U.S., we had Europe, we had, what are the other ones? Boy, Bank of Canada, I think, was one of them. And who else was in the mix? I'm drawing a blank. We had the 4th one last week. Anyway, then we got Bank of Australia Monday night. Okay, and then we have the Bank of England. And that'll wrap the 6 big central banks up. Okay, and now what we want to watch is all these FOMC speakers are going to be coming on Thursday. I think yesterday we looked at this. We had a few of them yesterday. Looks like we have almost none today. Okay, we get this ADP. Let's see where that came out. That data came out. Let me take a peek at that. We probably should have done that while we were there. Okay, so let me just see if I can go to that. Is it this one? There we go. Okay, so we have this. Let me just highlight it here. We had this. It's already passed a little bit. We're already 6 or 7 minutes past it, but the employment change was expected at 30,000 private jobs, and it came in at 42. So it was actually up. So private employers added jobs in October for the first time since July. So that's a good sign, right? If we look through this data we've got, let's see if there's anything that pops out right out of the gate. Okay, prior revised high, job stayers median 4.5, nothing big there. Job changers median change in annual pay. So pretty flat. Industry sectors, goods producing, 9,000 versus -3. Okay, that's a good increase. Service providing up a little bit from 28 prior to 33,000. Financial activities up 2,000 from 9,000 up to 11,000. And professional business services down from -13 to -15. Okay, and that would fit, right? That theme sort of fits for us with the AI. So if this AI is starting to, that's the stuff we would probably start to see. A lot of these professional business services type jobs are probably going to be the easier ones to replace with this AI right out of the gate, right? Because you and I can write a command prompt, right? We can go into ChatGPT or whatever AI, platform that we're using, whether it's an internal, like at a big bank, JP Morgan's going to have their own, or we go to GE, they're going to have their own, or we go to Ford or GM, they're probably going to have their own. And so, but they're going to feed the data from who knows where, right? They're going to feed it in. They're probably going to pair up and team up with ChatGPT and Perplexity and, all these different providers, Anthropic, all these different ones. And they're going to probably merge these data sets together. And then they're going to come up with this, and then they're going to turn it loose on their internal employees, and they're going to say, here you go. And so instead of hiring new kids or other people to fill spots, the idea is that the productivity from the AI will compensate for that. And so this seems to me like a pretty logical. Now that next month it could be totally different, and it doesn't. In the case doesn't. The story falls apart. But this is where I would expect to see those jobs start to be lost first. It wouldn't so much be. We know that like truck, transportation, trains, logistics, trucks, truck transport, that kind of stuff's harder to replace. It's coming, they continue to push. Are they going to be successful with it or not? I mean, can a AI really drive a truck down the road and make all the decisions that need to be made? I think we're still a ways away from that. At least that's been my experience with, driving in a car that's quote unquote semi-driverless. I think it's terrible, right? My personal experience with it is they're junk. Now, maybe I'm working with the worst one. It's a Toyota, so, maybe I'm working, but I just think the thing's terrible. If I had to drive it all the time, I would just get rid of the help. Maybe at night, like if I was a little bit tired, I might leave it on just in case I crossed a line or something. It would, alert you. I might use it for that, but otherwise I wouldn't. I just despise the thing. I think it's terrible. So that's the question. There's certain things where this could take place quickly, and I think it's in that services area right there. Okay, and then we have these different regions. Let me just see if there's anything that stands out on this, because it's our only data right now on the jobs front, so we might as well spend a little bit of time on it. So let's go through this. We've got industry, we went through that, Northeast regions. So in the Northeast, it went 21,000 prior, down negative 12,000. Midwest, negative 63,000 last month, and now it's up 9,000. So you can sort of just see a flip-flopping here, right? This is just probably like data issues, because I don't really see that big of swings happening other than these are some kind of like revisions or data issues with this stuff. You can see, from 21 to minus 12 in the Northeast, negative 63 to positive 9 in the Midwest. And then the South stayed pretty steady, 3 to 6. And then the West went from 15 to 40. So that was a big increase there. But to me, that's noise. These would be great things to chart, right? And track this stuff and watch this stuff. Okay. And then we get establishment size. We got small companies going from minus 40,000 to minus 10,000. So still negative, but better. Medium-sized companies, minus 20,000 to minus 21, so that stayed pretty much the same. And then large companies actually added 40,000 jobs, apparently, according to this, from plus 33,000 to plus 70,000, 73. Okay, and let's see what they say here. Private employers added jobs for the first time since July. Most relative was what we reported earlier this year, says Nella Richardson, chief economist at ADP. Meanwhile, pay growth has been largely flat for more than a year, indicating that shifts in supply and demand are balanced. Okay. All right, so I think there's some value in that. All right, let's blow out of that stuff. Okay, we'll get back in here. So that's our economic data. And again, the fallout from all these central banks and so forth is, what are the FOMC members going to say the rest of this week? We've got a bunch of people in the middle. We have Schmidt on the saying rate hikes. We have Moran saying rate cuts. Moran's pushing for 50 basis point, lots of rate cuts. This is what we're watching to see. If the market doesn't get that, it's going to not like it, right? Stocks. And again, what's Wall Street going to blame it on? Either blame it on Trump and tariffs, or they blame it on the AI, right? Looks like that's going to be their other whipping boy, is the AI, okay? Instead of saying like it could be the manufacturing, right? It could be manufacturing, not as coming along as well as maybe we thought it would. Maybe President Trump's tariff is working great in some ways, but it's not working great in others. Maybe it's not bringing back the manufacturing like hoped. Maybe there's just a lag. We don't know. But the stock market, it doesn't like something right now, because we watched those harmonic levels, at the 6909 on the S&P hold up and the 47,797. We saw a sell-off, and then we saw another sell-off again yesterday. And is this the beginning of a second wave down like we've been talking about? We'll get into those charts here in a minute. Okay, so that's a takeaway from this week, I see. And then Canada. I want to go into that tomorrow. There's a lot of things taking place in Canada. They're having to shift a lot of stuff. They're under pressure, and Carney's backtracking on World Economic Forum stuff. He's having to back away from this globalist play that he was obviously installed to try to perpetuate inside Canada. He's having to back away from some of the stuff. A lot of this is the pressure President Trump is putting on him. I think it's hitting Canada really quickly here. And so it's an interesting story. I just need probably a little more time to go through it. And I think we're going to run long on some other stuff anyway today. Okay. So let's get into this. We got headlines for the day. Government shutdown, day 36. We kind of talked through that. Nuclear arsenal at risk. We saw Chris Wright talking about that. Okay. The SCOTUS hearing on tariffs starts today. What's going to happen? I don't think President Trump, he hinted he would go to this and he would listen to the arguments being made, and then when's the decision going to come out? We'll get further guidance on this, but that's that. It's a big deal. It's a big deal because it's the key to his administration, and so can the Treasury and the Commerce Department return all the money that's come in from the tariffs? That would be. And it's even funnier it's sort of funny for two reasons, because again, if you use Bloomberg as some sort of a litmus test, or CNBC as some sort of a litmus test, they were all in all, some people weren't, but all in all, I would say they were very concerned about the tariffs, right? And very negative starting in January and February and then March. And then we get, obviously, the bottom in the stock market, that, again, pretty plain vanilla pullback, right? Markets need to pull back. They can't just go up, 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 up all the time, right? So we get this pullback, and it scares people to death. People were panicked, right? Oh, these tariffs are going to destroy this and everything else, okay? So tariffs are bad, okay? Now, if this hearing comes down, guess what? Tariffs are going to be bad that we don't have them, So see how funny that narrative changes? And I think that this is, this goes with the whole. It's just, this is so typical, right? And I've got some thoughts on that. I don't want to. It kind of gets us in the technocracy world. We may circle back to that today when I go into this, because around the energy, I want to try to keep bringing this technocracy concern, to us, to the show, and keep observing it, right? And the more we introduce it, more people will recognize things themselves. And that's one of the questions I want to ask today is, if everyone in here could, what do we have? We have a couple dozen people in here. And what I'd love to ask everyone is, what are the good things that you think President Trump has done? Okay. And what do you think are the bad things? At least one good thing that he's done, and one bad thing, one thing that concerns you, or one thing that's bad. And I think if we get, a couple dozen responses, I think it'll be beneficial to everyone. It'll be beneficial to me because I obviously, the people who come in here every morning are taking some of my bias. I try to use the markets to generate a bias, right? So it's not just me and the harmonics, but this technocracy, right? Working with Aaron Day, working with Courtney Turner, working with Patrick Wood, working with other people out there on this front, and coming up with this concern of the technocracy. This technocracy thing's been around for a long time, and and I guess I'm kind of hitting it now. The pairing this up with the tariffs, if I can do this, let's see if I can do this. So we have the tariffs; they were bad, and now it'd be bad if we didn't have them. Okay, and what would be the market fallout if we didn't have them? Especially when an administration is being built around tariffs. And President Trump has even said, without tariffs, we don't have a country. Okay, I don't know if that's a pretty stiff statement. I'm not sure that's. I see where he's coming from, but I don't know if that's like totally valid. On the other side, we take this technocracy movement, and this technocracy has been building for a long time, okay? And you can see it's very clear that this was going on in the 1930s, the 1950s, the 1970s, the 90s, and it's been going on and on. And the question is, does it just keep going on and on like that, or does it actually gain power, okay? And treasuries are struggling again today. I just got stopped out of a position there again. I think that happened yesterday to us too. These treasuries just won't go, right? That goes back to these trying to get lower interest rates, right? The administration's really struggling with getting these interest rates to come down, okay? And that's why these FOMC members matter so much this week, all right? Circling back to that. Okay, so back to the technocracy. If this thing has been progressing for this whole period of time, And these people that are running, quote unquote, this technocracy, right? The PayPal mafia, and the people that are above them who are obviously placing those people in those positions. That's how I think it's occurred, right? I don't think the PayPal mafia built itself. I think the PayPal mafia was selected, chosen, directed, funded, guided, coerced, maybe, Epsteinized, you know what I mean? Taken down there and, blackmailed, right? Whatever may have happened, however that stuff works, right? That these people are now, basically owned by whatever the elites, the globalists, the whatever. In this technocracy thing is, and why do these people want technocracy? Because it's control, right? If they can, and let me just show you this. Let me see if I can flip over. Let me try to get this one up. Let me just show you what I mean by technocracy. Let me switch over to this other PowerPoint. Like I said, I wish I could have just copied this. Here we go. Okay, just so people understand, because a lot of people are like, what the heck is technocracy? All right. So it's a system of governance where decision-making is guided by technical experts rather than political or market forces. Now, this is a big deal for me because I look at these harmonics and I think that, quote unquote, is market forces. And to me, I think there's some divinity to it. Okay, I think that there's vibrational patterns and cycles that occur, right, in everything, whether it's a tree and how the branches grow, whether it's fruit and how it grows, whether it's human beings, you got these hands, right, these things that are so important to us, right, that connect to our brain. We get an idea of what we want to do, and then we're able to do it. Because why? Because we have this mobility in our hands. And when you look at that, you've got 3 knuckles, right? You've got 3 joints between your wrist, and your elbow, right? These things are like natural patterns, 2s, 3s, 5s. They occur all over the place, right? Whether it's in nature, and it sounds so simple. Well, yeah, of course, but I think there's more to it than that. So again, market forces, okay, back to the divinity of these harmonics and things like that, or, and political, right? Because that's people's thoughts and ideas coming out, right, in votes, like for this Mamdani guy or whoever, okay? And then you have the technocrats who want to have these decisions guided by technical experts, right, rather than market forces. Okay, and then what we have is in economic terms, it emphasizes efficiency, sustainability, resource optimization over profit. Now, thinking back to this technocracy movement, what we have is this. So these people, right, whoever this is, who's orchestrating this thing, they need us, okay, to generate revenues, fight wars, steal money, right? Create money out of thin air, right? Create debt. All this debt gets created. Create these organizations, whether it's the British West Indies operation, through time, whether it's the Silk Road coming out of China, whether it's, trade, some fascinating trade that took place, all the way through Cuba. I mean, I was just reading about that the other day. A friend of mine's Cuban descent, and he was telling me about this, and I've always wanted to research it. Very fascinating stuff of how Cuba was utilized as sort of a meetup point for all the stuff that was being stolen out of South America and that region. No matter what's happened through time, right? There's we have this influence that takes place, whether it was slaves or now whether it's automation and AI and these things, right? It's the same kind of a concept. You use people or you use technology. But the funny thing is, to go from using people to using technology, they need the people, right? So we're in this whole process of getting cycled through this whole thing. And the question is, do they get to the point where, what are the terms that we get? What's it, the coming together? I forget the name of it. They call it all the time, where I forget the name of it. It starts with an S, but anyway, where the synergy, I forget what they call that. Anyway, where the two come together, right, where the automation is going to now exceed the human capacity, okay? And I think it comes down to the mobility in our hands, right? I think as soon as the robotics are able to do that, then the game really changes. Once they get the degrees of freedom, right, the degrees of movement out of the hands, I think we have 21 to 27, however they measure it. The robots are apparently at like 17. To me, that's like one of the biggest things. And this goes back to manufacturing, right? And that's what I want to cycle back to here in a minute, is the manufacturing data and how it's not coming through very good. And, is there some natural cycle in play here, or is there some orchestrated cycle in play, okay, that we need to be aware of as this stuff unfolds? All right, so that kind of gives you an idea on this market technocracy. And it comes down to people who think they're smarter than us, right? But yet they need us to get to that point, okay? That's the real thing to me, is they want to try to emphasize efficiency, sustainability, and resource optimization. And this goes into environmental social governance. It goes into the COP 2030, COP 30 that we were watching yesterday. We're even going to see this with Chris Wright today when we watch some of these clips, right? There's this pervasive thing out there that these people are smarter than all of us, yet they need us to get to this point, right? And they're using us. And the question is, we have always held the keys to the castle. We always haven't exerted our will. Okay. We allow the monarchy or somebody else to dictate how things are going to be. Sometimes you get good kings, you get good monarchies, sometimes you get bad ones, right? But we've always held, and that is really how the democracies come about. Okay. The concept of that. All right. So I'm getting pretty deep on this stuff, but I just wanted to show that. Okay. And the rest of this, let me see if this is, we may come back to this today when we talk about that. Yeah. I'll come back to that one. Let's go to this one. That's not too bad switching between these two, except we have to go through this again. Okay. All right, headlines. Let me get back down to where we were. Okay. Okay, so that's good. So so let me go through this manufacturing data before we get into this Mom Donnie thing, because I think it's important to think about too. All right, so I think I can do this pretty quickly. All right. Okay, so we talked about this, the BLS data versus the ADP data that we just saw come through, all right? And, one of them's private, one of them's public. Okay, that's great, right? So we're watching this thing unfold. Now, we're also watching this manufacturing data play out, okay? I've been wanting to focus on this manufacturing data, and if you've been watching along, I've, been paying attention to this because I think this is the key. Again, back to the mobility of the hands, back to the automation, back to the AI, back to all these different things. And here's the thing. We've seen this decline for the 8th straight month in the PMI data, right? Purchasing Managers Index on the manufacturing side, okay? And maybe we'll circle back and take a look at that here in a second, just so we have that chart in our heads. But the PMI index fell from 49.1 this week down to 48.7. Okay, that's the October data. 8 consecutive month of contraction, right? So the question is, the tariffs may be harming the new orders and exports, but the manufacturing has been on the downswing even longer than since April of 2025, right? So the question is, are there deeper structural forces at play here, from regulatory burdens, higher corporate taxes, supply chain stresses, right? As well as other countries just not being interested in buying goods, okay? So the question is, we talk about this debt, and the sovereign debt crisis that's on the front, right? The world's awash in debt, okay? And it's getting worse because the world's contracting, okay? Every indication tells us, right, that one, everyone's dealing with massive debt burdens. We talked about that, 100 trillion crossing the other day. We're at 38, so the world has another 62 trillion. It tells us we're the biggest economy because we have the biggest amount of debt. Sadly, I wish it was different. I wish we had the least amount of debt and we were the biggest economy, but it's not that way. Anyway, we're over a third of the world's debt, but we're also the biggest GDP. We're at 30. Everybody else, other than China's at half that. And then, Germany, France, the rest of Europe's at like 5-6 trillion. So it's proportional to some degree, right? It's pretty proportional. Now, here's the thing though, okay, is that the world is, we're definitely contracting. This is what President Trump is fighting against, right? He's trying to get the U.S. to grow, pull in foreign direct investment, create these tariffs, give us a level playing field, bring all this money back to create investment, to create growth. And the question is, can we pull the world out of this global economic contractionary spiral that it's in, that nobody really wants to admit to? And we can see this showing up in the manufacturing, right? That's the real key. We see the ADP jobs numbers. It's like, okay, this is why it would be so nice to track that stuff, but we can't, it's just so much work, right, to track all that. There might be some ideas on how we can do that, because I think it is that important. But something I would love to do, but not easy to do. Just takes commitment and time, and you just have to be so diligent when you do that stuff, all right? And make sure that you're sorting things out. But here's the thing, is that if we take a deeper dive into these numbers, and I'll pull this up, might as well just pull it up now. Let's just go back to that real quickly. And let me pull this up so we can actually see the data we're talking about. Let me see here. Okay, this is that PMI data. Okay, here's the one we're talking about. All right. We talked about this yesterday. So, we're looking at this. So here's April, okay? So 8 consecutive months of decline. Okay. But you can see we only had 2 months that were positive in here, right? We looked at this yesterday, and then back here in April of 2024, we had a positive number. And then we had, over the last, what? December of 2022. So 3 years, we've seen 3 positive prints. So we've had 36 prints, and only 3 of them, okay, 10% or less than 10%, have been positive. Now, it's not as negative as it was in 2023, right? The PMI data was coming in, 46, 47, right? And now it's at, 48, 49. But this doesn't bode well. This isn't a good sign for the manufacturing, okay? And the question is, can we turn this positive, all right? But if we look at the internals on this, okay, the details inside that number are this. The production was 48.2, down from 51, okay? The inventory, 45.8, down from 47.7. So those two are negative, but the deliveries were actually about flat. I think they were pretty much like around 54.2. So not only is the number negative, okay, it's continually been negative for 3 years, okay, and the internals inside of it are negative. All right, so this isn't good from a manufacturing perspective. Why do we care? Because it's a leading indicator. Why do we care? Because it might be one of the big things that's having an impact on the market, even though everybody else is going to blame it on Trump, or they're going to blame it on this or blame it on that. Three key takeaways here, trying to pull this together. Contraction out of the global economy. Okay, are we seeing a contraction? Right, even though we have all this AI stuff going on and the stock markets are at all-time highs, does it really make sense when we see Germany, the German DAX stock market at all-time highs, and we see their economy pretty much falling apart? Does it make sense when we see Japan with all this debt, okay, and struggling politically, right? The Sane Takaichi just gets in, looks great. She's going to open up the spigots more, spend more, continue going down the path that really, it's a sugar high, right? Continuing to go down the sugar high of just pumping more money out in the system while the whole system continues to struggle. We go to South Korea, same kind of a thing. Weak politically. Are they going to be able to develop good economic stuff, or are they also on a sugar high? Okay. And then us, the thing are we also on a sugar high, right? The manufacturing is weak at the core, leading indicator, yet we continue to get all-time highs in the stock market. Why? Because of the AI. Why? Because 7 hyperscalers, these big companies are skewing the earnings and stuff like that. So I still think that manufacturing is at the core of this stuff, okay? Whoever controls the manufacturing, whoever's doing the most manufacturing is still at the forefront of, what's going on. And again, part of the reason for tariffs, try to drag that stuff back here. And then we have this other wild card that we've never seen before, the automation of the hand, the robots, right, coming into this whole thing. So hopefully that comes together. I know it's a lot of stuff, okay, but again, centers around, the war drums beating, okay? Why do war drums beat? Because people don't have other solutions. So what do? They destroy stuff, kill people, spend money on defense, try to generate an economy, both sides, right? Weapons, war, destroy things. What comes after that, you get to rebuild everything, right? So you get growth. So it's an excuse to try to tear things down without putting the blame on government. And we see this happening everywhere, right? It's not like we see this in one place. We see it in Taiwan. We see Nigeria, Sudan, right? We're seeing Russia, Ukraine, Israel, right? Iran. I want to show this one thing. I wanted to show it yesterday. And then we see Venezuela as well, right? All this stuff's heating up. And the question is this to fix problems, or is this to create a cover-up, okay, for this global contractionary situation that has a debt bubble coming in behind it? And keeping in mind, and this isn't easy, right? I'm just trying to dump it, right, so people can sort this out on their own, is then you got this technocracy thing, right? Does some kind of a collapse allow this technocracy to come in and displace the human beings, right, for automation? Okay, because you're not going to get that easily. Just like COVID, right? We had to have a repo crisis, then we have to have a bioweapon, right? And then they shut the world down. Okay, they need some sort of an event to get people to play along. All right, so it's a lot of stuff to handle there. But I think the center is war drums beating, global contraction in economies. We see this in our manufacturing data. We see stock markets around the world at all-time highs. We see debt continuing to climb. Okay, and yet, is the stock market going to come off? And if it does, what's going to be the real reason that it's coming off? Because we want to understand that, because they're going to sell hope, right? Like I've always said, they'll sell fear when the stock market's going higher, right? Market goes up, we get the Liberation Day, market sells off, they sell fear, right? Fear, 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 fear. And what do we get? This massive run up, right, in the stocks. It's not easy. You know, you watch me struggle with that too. We get a harmonic structure. You think, man, could this thing continue? Is it really going to recover that quickly? And it recovers so fast, right? The more fear they can sell, the more the market can almost go up. The problem is when that party's over, right, and the sugar high ends, because maybe the manufacturing data is weak and maybe these structural things underneath the surface are breaking down, they're going to start selling hope. So they're going to tell you AI, 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 right? And there's hope. Look at all this hope in AI, right? Yet it's the manufacturing data that really matters, right? That's the thing breaking down, right? It's the global economy that's breaking down, right? And they're not going to tell you that. They're going to sell you hope. Hope, AI, it's going to be great. Hope, 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 hope. And remember back to the 2001 NASDAQ bubble, right? Everybody gets suckered in because of fear of missing out, okay? And we do come out of that with a lot of innovation, right? And this is, you know, discussions I've had with Aaron Day. We come out with a lot of innovation out of the NASDAQ bubble. The problem is people suffer tremendously. People have massive losses. And that might have just been a little tiny hors d'oeuvre of what will come now that this technology's like changed tremendously since 2001. 2001 was a lot of hype. There was some meat on the bone too, right? The internet, all the things around the internet. This is changing, right? As soon as those robots have more functionality than our 21 to 27 degrees of movement in our hands, the ball game has changed, okay? And again, you know, is all this stuff coming together for some big cyclical wave that's occurring right now? And then that's why that's why are we at a top? And I guess that's what really boils down. Let's take a look at this. That's what really boils down to the stock market. Let's take a look at the charts here, okay? Is the stock market hitting a top, right? That's why I talk, this is what goes through my mind, right? Is trying to think through this stuff and not getting caught in their hope trade, okay? When they start selling hope through AI, what's really going on? And the key is, are we at a real top here in the stock market, all right? I don't know, but these are the things you have to, sadly, you know, this is the stuff you kind of have to go through, right, to figure this out. People say it can't be done, but I don't agree with that. But I think these are the kind of, you know, somersaults you have to do in your head, right? We get this 6909 in the S&P 1, 2, 3, 4, 5 times. This one plain as day right here. This one is about as clean as you can get, okay, at the top here, okay? Comes up, hits it, and then this move down, right? We get an energy build, and as soon as we get an energy build, that blue box, okay, this is S&P on a tick chart. So Trumpet, sorry, I don't have it labeled still. I'm just struggling to have audio and video and everything else. So, but we'll get there. I will start labeling these things, but I just have to have first things first. Okay, then this market gets whacked, okay, yesterday. A little bit of a consolidation sideways, and then another little bit of a push down here. Are we seeing this? Let me see if I can show this again. Let me slide this in there. Are we seeing, you know, we get a lot of this, you know, first leg down from, you know, a topping pattern to down to one, right? Then we get the consolidation, and the market just continues to go on to new highs, right? And that's where we're at. The question is, are we going to go from 0.2 to 0.3 at some point? When we go from 0.2 to 0.3, it starts to tell us that something's turning over in the stock market. And are we at a bigger high? So far, what we've been doing here is just saying, okay, we've got some kind of a high here. Is it little? Is it a couple days, you know, sideways pattern, consolidation again? And we're going to run up to 50,000 at the end of the year in the Dow, right? You know, we're going to get 50 basis point rate cut out of the central bank. Are we going to get, you know, some more sugar high stuff, right? And we're going to get this just magnet of 50,000 in the Dow, and we're going to race to there. It's possible. The other thing is we might be at a top that's going to last into who knows where, right? A month, 2 months, maybe 10 years, maybe an all-time high. You can't rule that out. Now, when you pick again, the probabilities of picking some kind of a top aren't that hard, right? You can be, I'm maybe 60% accurate picking 60 to 80% accurate at picking some kind of a top, right, with these harmonics. Now, if you're going to say, I'm going to pick a 1-year top, that now goes down to like 20%. If you're going to pick a 5-year, 10-year top, that goes down to like 2 or 3% chance, right? If you're going to pick the all-time top, your chances of picking that is like 0.01 or 0.05. So I'm not sitting here claiming that this is an all, but it could be, right? But remember, the probabilities of that are really, really low, right? The probabilities of picking some kind of a top, 60 to 80% maybe, right? But the probabilities of picking that all-time top are like less than 1%, right? It's really, 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 really hard to do. But that's what we're doing. We're talking about the robotics, right? This joining of, maybe someone put it in there for me. Maybe someone will save me here with the word. It's the merging when the computers doesn't look like anybody saved me with that word, but maybe it'll come through still. Okay, so hopefully let's look at the Dow while we're at this. Let me just jump over here, take a look at the Dow. Okay. So we've got this thing, the 47,797. All right, we got up in there. And what I want to talk about here is, we hit the 47,797 back in this area. Okay, we popped above it, spent a little bit of time above it, right through here. And then post FOMC, central bank stuff last week, right? Again, 4 central banks. Hopefully I'm doing an okay job of connecting this stuff, right? Because it's not a pretty process, but this is why those central bank meetings were important last week. We see lots of eyeballs on the market, okay? Lots of opportunity for people to move positions around because there's liquidity there, right? Liquidity means you can get in and out of things without big market movement. When you have low liquidity and you try to move big positions, you get big price movement, right? It takes bigger price movement swings. So what they love is they get these big events, again, back to narrative control, back to Bureau of Labor Statistics, back to central bank meetings. A lot of this is narrative control for them, right? Where they get big points of liquidity where they can make these shifts. And then what they'll do is the media will come out, right? As this is such a simple process to get, then they come out and they say, oh yeah, the Federal Reserve caused a market top, or the Federal Reserve put in a market bottom. When really maybe it's the narrative control that they're after, and the liquidity, right? The liquidity of everybody showing up at this big event, right? The central banks are meeting, or this big event, the jobs data is coming out on Friday, right? And what we're kind of seeing is the markets, I actually like this when there's no data, because the markets are figuring it out on their own. It's much better for me to carry a position without some fear of going into a job, and you can get a 3% spike in one direction or another. And that's the control that this system's had over us, right? So hopefully in some way, right, again, this is one of the good things I think President Trump has done for us. This is one of the things I want to put on the list. Is one of the best things I think he's done for us is potentially take away the data and the narrative, right? We're seeing the narrative getting dissipated out of the Federal Reserve. We're seeing the narrative getting dissipated out of the Bureau of Labor Statistics, right? These are 2 of the biggest data points out there. They have been. Then you get CPI, Consumer Price Index, you get PPI. And the problem is those numbers can be manipulated too, okay? So that's why we look at the manufacturing, because I don't think they have as much intention at manipulating the manufacturing, yet it tells a pretty good story, right? We see the breakdown occurring in the manufacturing. So that's what we're trying to do, is look at the different layers of the onion, watch the harmonics, try to put the whole pieces of the puzzle together. Are we at some kind of a high? Clearly, right? We hit this, 47,797. Hey, we spent a lot of time there. You can see all the yellow circles there. You can see the energy build. As soon as we get the energy build, what does it do? It sells off from the 47,797. Look where it went back to. Again, I talk about this. You can't bank on this, but look where it went back to, right back down to the halfway harmonic, okay? And it's just hugging the halfway harmonic, okay? Now, this is a residual, so it's like throwing the rock in the water, watching the waves go to the shore. It's unpredictable. It's more predictable, the waves. You can when you see the waves from the rock pushing the waves to the shoreline, it's pretty predictable. You can actually see it. You can say, oh, I'd say in about 4 seconds those waves are going to hit that shoreline, right? And it's going to be clean, right? The waves have a nice, pretty ripple to them, right? They develop a nice wave. They hit the shoreline, and there's stuff all over the shoreline, rocks and everything else. They hit that, and it's all fragmented. They crash around, and then the waves come back. Sometimes it's clean like this. If it's a beach, right, and it's all sand, well, of course, the waves roll in, the waves come right back out nice and smooth. If there's rocks along the shoreline, it gets fragmented, destroyed, and everything else, and it's very distorted when it comes back. Right now, it's looking like maybe this halfway still has like a beach, right? It's rolling in, it's rolling out, right? It's reacting to the halfway. So now we can use this, right? It's reacting to it. Let's not just throw a number out there, some level, and say, oh, yeah, it's reacting to it, okay? It's reacted to the 47,797. It reacted to the halfway, the dark green line on the way up. Now it's reacting to it on the way down. It's finding support on that. If it starts to break this, is that what we're getting? 0.2 to 0.3, okay, on the picture below me, right? The Elliott wave pattern. we've got one, okay, that's pretty clear off of the 47,797. Are we going to get 0.2 to 0.3, or are we going to break that and we're going to go to new highs and we're going to be off to the races at 50,000? And it's going to be around the AI and the hyperscalers and fear, right? The Dow, if the Dow makes the run, it could be global fear. That's why we talk about the contraction. Will money start moving into the US dollar? Okay, if some fear starts to develop around the world and they start to, again, that's what we're trying to do with this manufacturing is we're trying to get, this is an indicator, right? We're trying to get out front of this. So you're not going to hear this in the news, right? You're going to hear this in the news after the fact. We're trying to think about this ahead of time. If the world's starting to panic, like Argentina or other places around the world, and they are needing dollars, right? And their economies are weakening, right? And they need to move money somewhere. Where are they going to move it? Well, where's all the foreign direct investment gone? Into the U.S., right? Why does this SCOTUS case matter so much? Because tariffs, right? The U.S. Can the U.S. lead us out of this thing or be some sort of a pillar of strength amidst all this global weakness and the war beating drums and the debt and everything else? So there's a lot of stuff to go on, and this is what goes into trying to pick some kind of a top in the market, right? Everybody says, oh, we're at a top. Well, have you really thought it through? I mean, and again, there's factors here that I'm not considering, clearly, right? That I'm coming at it from my lens. There's a lot of other things, but all you can do is the best you can with your lens and then try to broaden your lens, right? But I'm trying to bring, this is everything I've got, right? I'm trying to bring it all here to try to explain this, and it's messy, right? So it's a messy process that goes on, but the only beautiful thing here is the harmonics, right? That clarifies it for us all. And the price movement, right? The fact that 8 billion people on planet Earth in some way, shape, or form are all connected, okay? And that is a beautiful thing, right? And we're all connected to the commodities and the debt and the currency and the stock markets and the assets and the hope and the fear and the greed and all these other things. Somehow we're all connected. And that's what plays out through these harmonics, right? So that's the pretty part. The part that I have to go through isn't so pretty, right? But now you're seeing the thought process, and hopefully it brings some value. All right. So that's a lot of stuff right there. Let me see what we can roll on to. Let's take a little break and have a little fun here with Mamdani. All right. So this is his pre-market. I guess it's fun, right? I mean, if you see the thumbnail, I've got in there, you know, the Statue of Liberty, Lady Liberty has got her head down and, in panic, right? Or depressed. There's Mamdani, pumped up. But here's his pre-campaign, just to give us a little bit. And I don't really like covering this stuff, but the politics of it, but we can't, like, what's going on here? This does fit into the equation, okay? And I'll get to that. And let's just roll some of the stuff. We won't go through all of it, but let's just get a flavor of this, so that I can hopefully make a valuable point. And plus, while this is going on, it gives me time to look back through and connect with you guys through the chat. So there's double purpose here. And if you can, fill out your favorite things with Trump and your least favorite things, or the things that concern you. I'd love to get that feedback, and I think everyone in here would appreciate it too. Okay, here we go with Mamdani.
The entire media and political establishment said we had no chance.
The Kalshi odds that have our chances of victory in the 90s.
93% on Kalshi right now.
I think I hadn't spoken to since high school. Texted me like 5 days before the election. Goes, yo, bro, I just put 1,000 on you. Like, please don't let me down.
Okay, and then we have this one, all right? This is his victory speech last night. Let's play this one real quickly. I probably won't watch all this because you're going to see this. If you're watching any other media, you're going to see this. It's going to be covered all day long, so I don't want to overdo it. Let other people do this. But again, just to get a flavor so we can comment on this stuff. Oops, sorry, wrong one. Here we go.
A nation betrayed by Donald Trump. How to defeat him. It is the city that gave rise to him. And if there is any way to terrify a despot, it is by dismantling the very conditions that allowed him to accumulate power. This is not only how we stop Trump, it's how we stop the next one. So, Donald Trump, since I know you're watching, I have 4 words for you. Turn turn the volume up. We will hold bad landlords to account because the Donald Trumps of our city have grown far too comfortable taking advantage of their tenants. We will put an end to the culture of corruption that has allowed billionaires like Trump to evade taxation and exploit tax breaks.
Okay, so that's enough of that. That gives you some flavor. We don't need to listen to all that stuff. But again, you can see the pre-thing, right? You know, the vote. This guy was an outlier. You know, he ends up winning by a lot, you know, significant amount. So again, 111th mayor of New York City, 34-year-old mayor. He'll be sworn in January of 2026. Youngest to hold this position in over a century in New York as the mayor. First Muslim mayor. First of South Asian descent, I do believe, okay? He's been very good at pointing out problems. Can this guy arrive with any solutions? Okay, that's going to be the key. That's been the problem with New York. They got big problems there, okay? And we knew Eric Adams wasn't going to be able to do it. I mean, the writing was on the wall. This guy was very limited at best, okay, in his ability. Not the sharpest knife in the drawer, clearly, right? Very limited at what he was going to be able to do. He had a police angle on things. And I don't even think he did a very good job on that, okay? Maybe a terrible job on that. Again, everybody's opinion, that's fine. I don't care. But from the other side of things, this guy had I don't know. I think he's a box of rocks, right? Eric Adams. All right. That being said, what's Mamdani going to bring to the table? I have no idea. But here's the thing, you know, this Prop 50 passing in California, it's a story for another day, but this is one of those things that can springboard Newsom, okay, into making a presidential run, right? And this guy, Newsom's a complete clown, just like this guy, okay? There seems to be these elections in California that have been rigged because I just can't believe how guys like this, is that really where our population is at? Are they really... And here's how if they are voting for this, here's why they're voting for it, okay, is because the campaigns are always on affordability, right? Even Newsom's going to claim affordability. California is its own animal, right? We're going to see in one of these clips here soon about how they don't even buy the energy from the U.S. They're buying it from, you know, overseas. Now, you could say, okay, well, that's good because they're a port town. It makes sense, right? Or port state. They can bring it. They got ports all over the coast. They can bring things from outside, and it's harder to get, you know, pipelines and so forth out to California. Okay, so there's a decent excuse there, but it's an excuse. You know, we could easily bring U.S. energy to California, okay? It's just, we've just separated from California to some extent. The middle part of the country is clearly separated from California over the last 20 to 30 years, all right? Okay, so, but it's always on affordability, right? And that's the common theme here, right? Kamala Harris campaigned on affordability. President Trump campaigned on affordability. Now, this guy also on affordability. He had the highest voter turnout in more than 3 to 4 decades. Pulled this off with what's, you know, this grassroots coalition, supposedly. Okay, again, we'll have to wait and see. Time always tells on this stuff. You know, that's what they tell you, but then you see later on, oh, yeah, it was funded by this guy or that guy or this person or whatever, and it wasn't a grassroots operation, okay? So, and the other thing that's going to have to happen here is, you know, this guy has a communistic skew on him, clearly, and he's going to have to work with business leaders, right? And those two don't mesh really well, okay? So, this guy seems much sharper than Eric Adams, okay, but is he going to be able to make any traction at all whatsoever? And especially if he's going to go head to head with President Trump and it's going to become a funding issue. This guy's going to have a head wall in front of him, I think, okay? But maybe there's something bigger in the works here, right? Maybe there's something bigger cooking in terms of, you know, again, we talk about the Civil War building, all right? And the internal things, right? You start shutting down food stamps and government shutdown. And the question is, what are really the sides? You know, I think it's really, sadly, it's we the people. The problem is we the people are getting divided here, okay? And that's when we're at our weakest, when we're divided. And we can't find common things, right? You can always find things to pick on people for. The hard part is finding things to agree on, you know? And that's the loving things, right? Is letting love guide instead of hatred, you know? And so love is agreement, finding agreement, working hard to find agreement. Hatred is saying, screw it. I don't care. I don't agree. I'm doing my own thing. Forget them, right? And that's kind of more where we're at. We're going the hatred route, And so, again, does AI feed into all that? Does all the social media feed into that? Sadly, it probably does. Okay. But here's the thing. Trump was big on, when he came in, he had eggs, energy, housing, all big things that were high, affordability, right? Rents, and so forth. Okay. Same thing with Kamala Harris. She was promoting affordability and rent, housing, groceries, education, childcare, insurance. I show this all the time on this show. Okay. This particular thing. All right. Let me skip that. Boy, I still want to show that at some point. Hopefully it's that one. Yeah. I show this all the time, right? We're cruising along from 2009 to 2020, 1.8% annualized inflation. Then clearly, Kamala Harris was the vice president, so she watched this first and foremost, right, under Sleepy Joe, and we get 8.6% annualized rate of inflation, right? And then midway through their administration, they realize things are falling apart. People are getting ticked off, willing to vote for people like Imam Donnie, who's going to promise things that may not be able to be delivered. And then we get a 3.1% annualized rate. It tapers off a little bit, and now we taper off to 1% annualized rate. But the problem is this is compounding, right? And people are feeling the pain. And that's the real key here, is that people are feeling the pain, okay? And that's what every candidate's campaigning on is affordability, right, of the people. The problem is, can they actually achieve that? President Trump, to me, seems to have the best plan to do that, right? Growth. You got to get growth. How do you get growth? One, level the playing field with the world, okay? Bring in as much as you can, refortify the U.S., okay? Try to get manufacturing to come back. Try to get this, try to get your grips on AI. If AI is a cat out of the bag and you're not going to live without it, right? We can't go back to, like I said yesterday, the Dukes on Friday and Love Boat on Saturday. Those days are gone, you know what I mean, where everything seems peaceful, as a kid, at least to me it all did. Now everything seems pretty chaotic. The key is, if you can't go back to that, then you have to deal with this AI thing, okay? And so we might as well embrace it, harness it, and win it, because if you don't win it, you lose it, right? And so it's really that simple, okay? Here's the best campaign of all, I think, though. This is the one that I love the most. Having lived in Florida myself, in 2003, 2004, and part-time down there in 2005, and maybe a little into 2006, I would go down there on the weekends and stuff all the time. I had a home down there. And anyway, the point is, from Chicago, the point is that I've seen, when I was down there, and then I see Florida now, I was just down there in the spring, when I see the growth is tremendous, right? And I have to believe it's this migration, right, coming out of places like New York. So here's a campaign, right? I think this was pretty funny, and I thought this one was great.
To Florida, there's water moccasins everywhere, snakes, alligators, tornadoes, sharks, hurricanes, heat, humidity, mosquitoes, fleas, ticks, red ants. Don't move to Florida. It's horrible. It's awful. Don't believe what they say. It's just terrible.
So clearly it's a claim to not have more migration to Florida, all right? And the boy, I just saw my volume spike. I'll have to ask Rachel if that was a problem there, because right when we came out of that clip, I saw it spike, just go red. Hopefully it's not loud and blowing people's ears up. We're trying to work through the sound here, and hopefully we can make this seamless and better for everyone. All right. Okay, so again, if you can throw in your favorite things about Trump, your least favorite things, the things that concern you, if everyone could, more important than putting the thumbs up, right? To me, that's the most important thing, right? If you could just put that stuff in there, I'd love to see that. I think other people would appreciate seeing it too. And, don't try to be original, but the more original thoughts, the better. That way we can really kind of get a good feel for, a decent sample size here of people and their thoughts. Now, I know we're all skewed here to some degree, right? Otherwise, there's a lot of people who aren't going to come in here at 8 a.m. to listen to me talk about manufacturing and technocracy and all the other things, okay? But so we're clearly a skewed group here, and we're a biased, section of the population. But nonetheless, it's still a decent sample size, and I would really greatly appreciate that. Okay, so let's cruise on here to Chris Wright. This kind of fits in with things, I think, right? Especially since it's Energy Day. Here he is. I can't hear this one, so I'm just going to let it play. I think it's short, like maybe 20 seconds. And I forget what's in this one, but this sets up his recent meeting at the G7 on the energy front.
I would say the focus issue has been energy security. And we are talking a lot about President Trump's agenda, which is prosperity at home and peace abroad. And the key ingredient to achieve those is to have a robust, reliable, affordable, secure supply of energy. Our dialogues have been about being honest and math-based on the views of energy and climate change, and getting those two things right, we can bring to all countries of the world prosperity at home and peace abroad.
Okay, so fortunately there were captions on there, so I could see it. So that was great. Looked like my sound spiked there again, but we'll see. Hopefully it didn't. Okay, so that's an overview of the G7 meeting and what they were covering from an energy perspective. Now, this next one is Chris Wright talking about Alaska. Okay, President Trump talked about this. Alaska is a potential. Think about the geographic location again of Alaska, right? Easy to move things out of Alaska into China, pretty easy, into Japan as well. Okay, so energy deals with Japan. What's going on there? South Korea probably needs some energy too. Taking away some of the power of Russia. Okay, again, back to this. So this is, I think, a positive thing. And here's Chris Wright's perspective on this from, again, at the G7, what came out of it, but Alaska and how important Alaska is in this.
Joining us now, I am so pleased to say, is U.S. Energy Secretary Chris Wright from Toronto, where he is in the G7 meetings with other world leaders, talking about energy and what can be done to build out. U.S. Energy Secretary, thank you so much for being with us. I want to start with this deal that President Trump was hinting at with China, talking about Alaska oil. What details can you provide us with? What contours of this transaction do you expect to come to light?
Look, that China is by far the world's largest importer of oil and importer of natural gas. The U.S. is by far the world's largest exporter of natural gas and by far the world's largest producer of oil. So there's so much space for mutually beneficial deals between the U.S. and China. Alaska was mentioned in that deal dialogues, enormous reserves on the Alaskan slope. They've been strangled by the Biden administration, and Alaskan production's been in decline, but lots of room for that production to grow, lots of room to bring natural gas from the North Slope of Alaska and bring that to all of our allies along the East Asian Rim, or frankly, anywhere in the world. But President Trump is just a master negotiator. He finds out what is it that's critical to the Chinese, what is it that's critical to the United States, and finds that sweet spot of a deal that works for both countries.
Okay, so I think some good stuff there. And again, Chris Wright is clearly a very bright individual who really does understand the energy space. There's no doubt about that. I mean, you listen to this guy, I've listened to pretty long conferences with him, and he's never at a shortage of ideas, and he never is caught without an understanding of the energy space, right? Whether it's solar, whether it's wind, whether it's nuclear, whether it's coal, whether it's natural gas, whether it's petroleum, crude oil byproducts, right? I mean, this guy's never caught. He really does. This guy is super sharp. Now, is he, I'm going to let it be at that, right? But again, keeping in mind this energy technocracy, all right? And what are the key things we would be watching for if we were watching this energy technocracy? The technology of generation and distribution decisions, okay? Consumption decisions, like, are they going to control who gets to consume what at what level? Okay. Boy, a million thoughts crossed my mind there. Technical efficiency. All right. And the decisions around that. Okay. These are the system optimization, right? And then taking commodities, taking something from being a quote unquote a commodity, okay, that functions based off supply and demand, to something that's a managed utility, okay, decided by a set of rules by those who control the decision process. This fits right into that algorithm, AI, AGI, all these different things, right? Those are the things that we would be watching for on an energy front from an energy technocracy perspective. Okay. All right, so let's keep moving on here. I want to get into merge this with the technology and the AI. We know that the AI revolution is going to need energy. Okay, what's a big gap filler? We've talked about natural gas. Okay, we've talked about, some people are saying solar is a solution. Some people are saying wind. Some people are saying it's a combination of these things. Some people are saying it's nuclear, right? Some people say we have another form of energy just around the corner, right? And that's going to solve all these issues. Okay, again, I don't know, but all I know is natural gas seems like a slam dunk because you can turn it on, you can turn it off. It's not like a coal-fired power plant or nuclear where they have to be. Those are great for baseload. Coal and nuclear are great for baseload. Natural gas is a great filler. When you need a little bit more, you turn it on. It's also pretty cheap. It's pretty clean, so it gets around all the environmental social governance nut jobs out there. It gets all around their whole argument. Okay, the natural gas is very clean. All right, but here is AMD. AMD was out reporting. Okay. And again, people are going to slam this. You know, this is sort of getting attributed a little bit to the weakness in the stock market, right? Again, this AI thing is, again, running us through the emotional process. It's getting overinflated. Then, it's getting, we need a little sell off in the stock market. I want to put that out there because I'm watching to see how they're going to sell hope. Remember, my whole lifetime, I don't think we've ever been in a bear market, a real one, right? We get these little bear markets that, they don't even announce them when they're happening. They announce them after they happen, a 20% downturn, right? Okay. Or a recession, they announce that after, right? The economic guys, they don't announce it during. They tell you sometimes months after, oh yeah, we were just in a recession for the last 18 months. Well, what good is that? It absolutely does you no good, right? And they get paid to do this on top of it all. We're trying to stay out front of this. So what are they going to sell to us if they're going to sell hope? If this is some kind of a market top, what are they going to sell to us? Okay, that's the key. And so AMD is a big player. Intel's a big player. Taiwan Semi is a big player. Okay, they're going to be NVIDIA is a big player, right? These are going to be hubs in the middle of this whole thing, all right? And AMD, again, is important. And here's Chris Wright talking about AMD and the Department of Energy and creating a public-private partnership. Again, think about this. This is good, and he tells you the reasons it's good. But again, keep in mind the technocracy behind this, okay? The gathering of power. Okay, and who's going to be in control of that after President Trump, right? That's the big question we have. Is it going to be a guy like Mamdani? Okay. I mean, this guy crushed it. He's over 50%. I think the biggest turnout in like 30 to 40 years, right, in New York. So these are the kind of things we have to be concerned about. We get all this power aggregated in one spot, and who's coming after him? Even if President Trump's perfect, and I don't think he is, but even if he was perfect, who's going to come after him? All right, that's the question. All right, and so here's Chris Wright talking about the merging of AMD, Advanced Micro Devices, and the Department of Energy creating this public-private partnership. I think I have this. Hopefully I have this right.
Congratulations on this huge deal.
Yeah.
Does this mean that the U.S. Energy Department is investing $1 billion, or is AMD investing the money? Where's this $1 billion coming from?
The direct capital is coming from AMD. What we're providing is the data center. We've already got a computing center there, and we're just adding new machines into that data center, and we will run and operate the machines. So we were certainly sharing part of the financial burden, but this is just a perfect example of a public-private partnership when we want to move fast. We don't want to run a 2-year procurement process and then a 2-year build. AI is moving fast. We need the government to move fast. This is President Trump bringing common sense back to Washington, and the benefits roll in.
Okay. So pretty self-explanatory, the public-private partnership. We've seen this with Intel. We've seen this with NVIDIA. We've seen the government getting involved. We've seen the talks of the Sovereign Wealth Fund, putting all these assets in there, for the benefit of the people, for defense, okay, for security. Again, fear of war, fear of all this stuff. Again, we have to be careful with this, falling under the umbrella of fear, okay, and making decisions out of fear, fear of this, fear of that. It's always a dangerous place to be. And at the same time, we have to get President Trump credit. Again, where are you on the fear spectrum? It's pretty light fear right now. 2 or 3 years from now, when the debt's even worse, right? Maybe the economy's coming apart, right? The interest rates are rising. The rest of the world's in more of a bad situation, and so therefore they're more and more willing to go to war. Okay, then the fear is higher. So again, are we at the front of this trying to diffuse it? Okay, or where are we on that spectrum? It's hard to measure, okay? What is the breaking point, I guess, is the question. The breaking point of the debt, the breaking point of, tensions with Russia or tensions with China, right? And we know, we've talked about this, that whole thing in China, like, I don't think anybody can say, oh, yeah, that China's solved. I mean, there's no way that that's solved. There's no way you go there, meet with him supposed to meet with him for 3 hours. It's a shortened meeting, I think, hour and 47 minutes or something like that. And you think that they solved all the all the differences between China and the U.S. in an hour and 47 minutes faster than the 3 hours allotted. You know, you can't, and I don't think anybody who's a thinking person can think that we're past things with China. You know, I mean, and what is China? Again, we keep saying that. You know, are we really that separate? Is it really? Are the people who are running things running both sides of it? Is it just China's one plate they spin and the U.S. is another plate they spin, right? How much, and is President Trump trying to expose this stuff to us, okay? So that, because again, he can't do it all. No one can do it all. You know, there are lots of things in question. All right, but here's the key. No matter what we do, no matter what administration we go through, it really still, at this point in time, it still boils down to the people, right? The connection of us, the demand, right? How much demand do we have for this stuff? And you can see this, I thought this was a great clip. And this is what I really wanted to point out with it, that not much really changes no matter how much rhetoric and narrative they push at us.
73% of the total energy consumed in the United States comes from oil and gas. It's a record high ever. The Biden administration passed $2 trillion of monies aimed towards fighting climate change. Oil, gas, and coal were 82% when they arrived and 82% when they left. A lot of money, a lot of regulations, a lot of laws. It doesn't move an energy system. California actually gets a greater percent of its energy from oil and gas than the rest of the country. But yet this political posturing, all this noise about climate change, they're not doing anything about climate change, but they are making energy massively more expensive in California. California gets 2/3 of its oil imported from the Middle East. America's a net oil exporter, but not California. What does that mean? Higher gasoline prices, higher home heating prices, less jobs and opportunity in California. Common sense has got to return to the West Coast as well. California should be the land of opportunity, but state government, bad politics, bad regulations have just made things tougher on Californians. Yeah. So yes, state governments matter, not just the federal government.
So again, we see that inflation chart. Inflation went up. They manipulated the energy. They weren't letting us drill offshore, right? They weren't doing all that stuff, right? Let's go back to that real quickly, right? We see that's a big part of what made that thing go up at that 8.6% annualized rate, okay? It's a big part of it. And yet not much really changes, you know? Is that crazy? To me, that's just crazy, right? We, the people, see the inflation, okay? Yet the demand and the supply and the usage and everything else hardly ever changes. It has to make your head spin, right? It just makes my head spin. It's like, it's hard for me sometimes to get my head around some of this stuff. Okay. So that's what we want to do on the energy front today. And then, on the energy front, we also had Dick Cheney pass away the other day with Halliburton, and I'll just call him with Halliburton, right? You know, and again, this is that, you know, and obviously the VP, and he, you know, obviously haunted the halls of D.C. for many, many years. And, you know, you could comment so much on this guy, right? You know, again, public-private partnership, you know, but secret. These are the problems with this stuff, right? Sadly, you know, one of my, you know, the dean of my business school said, you know, one of his things, I remember one thing out of his, you know, speech, and he said, there's only a few things I walked away with from school, and this was another one of those things of value. He said, his words were, be missed. And you're like, okay, be missed. You know, that means you're doing something that people are like, wow, when you're not there, they miss, you know, something that you're doing, you know. And so I took that to heart, you know, be missed. I don't think Dick Cheney's going to be missed, right? So again, not the way to live your life. I don't think Liz Cheney, his daughter, is also missed, okay? We saw her go back to, was it Wyoming, I think, and just get decimated in the polls, okay? These are these globalists that nobody likes, right? We don't even know who they are, so how could we ever miss them? You know what I mean? That's the thing, right? They're always lurking under the thing. They can't be missed, you know? Dick Cheney's out in the front, and just a dirty operator in so many different ways, okay? And I just don't think this guy is going to be missed. I don't know what's in store for him for eternity. I have no idea. But I'm just saying, I don't think on this planet he's going to be missed by very many people. I don't think especially the guy that he shot. Remember that when he was hunting and he hit his buddy or whatever? He's not going to miss him for sure. So the point is, you know, the energy front. Let's take a look at the charts here. I just want to finish up real quickly. Let's take a look at energy. Here's the Treasury notes. I just got stopped out in this again. This thing just can't quite get going, you know, no matter what the administration does. I just wanted to look at this just because it's important. Let me me just open this thing up. There we go. Okay, so now we're caught up, and we just keep bouncing off this harmonic level again, right? This treasury market is just struggling. You can see it just hitting the upper end of this breakout zone, and we've been up pretty high in this thing, right? We got up to the halfway harmonic in this, right? And we actually got up to the 5/8 back in here, back in October, right? Here's the end of October, okay? And then we see it, hover around the halfway. We see it not quite get there here. I've got some yellow marks marked on there. You can mark where it reacts to it, okay? All the reactions. You can put them on here all over the place. But the point is this, that this 10-year note's really struggling, and it could be building a base for a big explosive move. What would that be? Back to the FOMC, right? What are they going to say? We got 6 speakers coming tomorrow, okay? Is someone going to move off their stance and go toward lower interest rates? What's going to drive that? Is it going to be, what is behind their thinking? Are they, boy, you could just open up a whole can of worms with this. But the key is, does this manufacturing data matter? Do the interest rates, does inflation matter? Are they going to try to tackle inflation? Are they going to try to tackle the jobs? Is the stock market going to sell off? Are we at a top here? And the global economy is weakening, and yet people move into U.S. Treasuries because of war. Remember, if we're going to lead, if we're going to be the safe haven, because we have the strongest military, and the rest of the world's weakening, and money needs to go someplace, where would it go? Into the U.S. Would it go into U.S. Treasuries? Remember, we also have it's just so many things you can open up. The stablecoin, the Genius Act, the Clarity Act, right? Creating demand for our U.S. Treasuries by this new currency. We know that this currency is coming on soon, too. I know I just keep throwing so much out there, but there's so much going on. There's just so much going on. We've got this digital currency. We saw Christine Lagarde talking about rolling out the digital currency starting in 1st of 2026, fully implemented by 2029. So over the next 3 years, right, as war drums continue to beat, the digital currency is being rolled out. Is Lutnick and Bessent and President Trump creating demand for our U.S. Treasuries via Clarity Act, Genius Act, stablecoins, tokenization, all these things that I know that a lot of those things some of those things might mean a lot to some of you. It might not mean much to some of you. But we need to do a good job of covering those things so that we can watch this whole thing unfold. The takeaway is this, though. If this Treasury starts to break below that pink shaded zone, there's a good chance we're headed toward higher interest rates. Can the stocks and treasuries go down together, for a while? And then maybe at some point the treasuries bottom out. I don't know. That's why I'm watching these harmonics again. What's really going on? Okay, what's really going on? Key markets, dollar. Key market, Swiss franc. Key market, 10-year note. Key market, crude oil. Let's take a look at crude oil. I think crude oil is becoming less important, okay, but it still is important, right? We've got this thing, the 63.18. That's what we keep watching, the white dashed line. Okay, you can see it came up, tried to make a run at it. It's getting weak. To me, that's getting weak. The fact that it can't get up and touch it. If you remember what we just looked at in the stocks, right? It went up, hit this 47,907, 6909, 47,797, the 6909. And then that last push up, before we really started seeing the moves down, it couldn't get back up to that level, right? That's a sign of weakness. Is this weakness in this crude oil that it just can't keep moving? We talk about, President Trump's talked about, 1 million barrels in a strategic petroleum reserve. They're trying to keep this thing can go sideways for a long period of time, right? Trying to keep the Middle East happy, trying to keep our Saudi Arabian buddies happy, United Arab Emirates, keep everyone so at least they're making some money. But if we let this go higher, think about what's going to happen to that inflation again. Think about what's going to happen to the global growth. It's going to get crushed, right? What's the straw that breaks the back? It could be energy if we don't keep the energy costs down, because everybody in the world is impacted by this energy. So very important market, but I think right now it's been stalled out on purpose. And this is why that bear put spread can work potentially for the next 10 years, right? You just keep doing it again and again and again. Now, if it loses volatility, it's going to be harder to do because the option prices aren't going to yield very much return. So there's going to be an attrition that comes with it over time. If you don't have volatility, then the option prices dissipate and they're not as expensive, right? So that's a whole other story. But the point is that, okay, let's take a quick look at natural gas here, then we'll get rolling. No, it's a lot of stuff today. It's a lot of stuff for me. Natural gas, look at this, climbing above the halfway harmonic, okay, right above the dark green line, this is what we've been talking about. This natural gas looks good, right? This is the filler energy that I think there will be demand for, and it will look good. Every sign indicates, right? The longer term charts look good. The concept behind it looks good. We're climbing back above in this harmonics. Can it make a run at that bright green line, the full upside objective? This harmonic structure is old. I get it. It's been hanging around for a long time for those who've been following, but we've been talking about this since, gosh, early this year, maybe even late last year, about this natural gas. The short side of the crude oil market, the long side of the natural gas. You got a net neutral strategy. You're short crude, you're long natural gas. Makes a lot of sense if you put it in that context, okay? With that in mind, you can find a lot of things out there, a lot of ETFs, a lot of different companies, and we'll do that, but again, we have to develop the backdrop first, right? So we have the backdrop. I think I have some help on this, right, to help us break down through these sectors, subsectors, sub-industries, and so forth. And if we can do that properly, we should be able to come up with a lot of ideas around this whole sector. All right, with that, I think we're done. Have a blessed day, everyone. And we'll be back tomorrow to take a look at the equity markets. We'll see what happens today with the stocks. Do we get a little more pressure to the downside? Do we go sideways? There's a couple big down days. We'll see what the sentiment is. It's a trading market right now. You could take a short stance in the stocks and sit tight with it and use that 69.09 and that 47,797 as your guidepost. Remember, I don't rule out a run at 50,000 yet in the Dow, right? What would do that? The 50 basis point rate cut. A lot of different things can happen. It's why tomorrow is important with all these FOMC speakers. But in the meantime, I think this is a trader's market. I'm biased to the downside here. It's been working the last couple days, off those levels we've been talking about. Let's see what happens with the Treasury note, the stock market overall, and let's see what happens. Remember, don't forget we have that monthly overvalued, right? Let me just show that real quickly. I know this is, here it is. Let me slide this over. Right, if you look at the global stock markets, it should be that one. There we go. The Dow, monthly, right column, red, overvalued. S&P, monthly, overvalued. NASDAQ, overvalued. Nikkei, overvalued. The Russells, I got it. That's an issue with another thing. I don't pull data in here very well from the Russell. It comes from a different exchange. FTSE, right, UK, overvalued, daily and monthly. The Spanish IBEX, overvalued, right? Hang Seng, overvalued. Kospi, overvalued on the daily, weekly, and the monthly, right? The Swiss market index, not so overvalued. Isn't that interesting? We got the signal on the Swiss franc. It's not that overvalued. Pretty interesting. The Topix index, right? Overvalued. The Singapore Straits Times index, overvalued on the monthly. So really pretty much the world we've covered, we haven't covered, there's not much South America stuff in here. We probably need to add that into the mix. But we're pretty overvalued, and it takes time. It either takes time or it takes price movement down to burn that stuff off, okay? Or maybe we just inflate it with, again, sugar high with lower interest rates, kind of like Japan's doing with Sane Takaichi, right? Just going to come in and open up the spigots again, let money flow, and hope that solves a problem. But it's not going to solve it, right? It's just going to make the problem worse. You can fake it for a while, but the question is, some of these things you can fake it till you make it. Some of them you can't, right? It's just you're going to fake it till I don't know what the right word is, till somebody else takes it, I guess. I don't know. Who knows? Anyway, with that, have a blessed day. We'll come back, look at the stocks tomorrow. Let's see what happens today. It's a trader's market. I think to the downside, to sideways. But again, always on alert, protective stops, for those who are active in the markets. Otherwise, if you're sitting with a long position, I would say just sit tight until we see something major break. We still haven't seen anything other than a up to a 1, right, on that Elliott wave, okay? We haven't seen anything major break, right? For those of you who are sitting with long investments, just be aware, be cautious, maybe thinking about, for sure pulling. We'll leave it at that. We'll come back and talk about equities tomorrow. Have a blessed day, everyone.
I could argue
wrong
in
line.
the developed countries, the big winners are
We don't
countries
need
that
to
have
listen to Larry
shrinking
Fink again.
populations.
Hopefully I've got this.